Over the past few years, a brand of nicotine pouches called Zyn has taken the world by storm. It's become popular among influencers and drawn the ire of politicians. The Zyn brand is owned by a company called Swedish Match, which was recently acquired by the tobacco giant Philip Morris International. Swedish Match has an extremely interesting history. It was founded in Sweden more than 100 years ago by a man named Ivar Kreuger. The success of Swedish Match made him the richest man in Sweden by far, and one of the richest men in the world. At his peak, he was held in the same regard as other business titans like JP Morgan and John D. Rockefeller. Throughout the 1920s, shares in Swedish Match's parent company were the most widely held security in the entire world. But as it turned out, Swedish Match's apparent success was built on the pillars of deception. In 1932, the enterprise was exposed as the largest and most sophisticated Ponzi scheme the world had ever seen up to that point. When his fraud was finally exposed, his companies went bankrupt, and investors lost more than $300 million, worth more than $5 billion today adjusted for inflation. Unwilling to face the consequences of his crimes, Kreuger cut his own life short, and his name was quickly relegated to the trash heap of history. 100 years later, the company he founded has again found itself in the limelight with its massively popular Zyn product. In this video, we'll dust off the history books to analyze the life, crimes, and death of Ivar Kreuger, one of the greatest swindlers the world has ever seen. Ivar Kreuger was born in Sweden in 1880, where his father owned a small match factory. His deceptive tendencies started from a young age. As a teenager in school, he often cheated on assignments and tests. For example, he formed groups with other students where each one would complete the homework in the subject they were best at, and share the finished work with all the other members of the group. Shortly after graduating college in 1900, Kreuger moved to the United States, which at the time offered greater economic opportunities than his home country of Sweden. He eventually got a job as an engineer for a construction company in New York City. While in New York, he learned of new innovative construction methods, specifically how large structures could be built with reinforced steel. Notably, Kreuger helped on the design and construction of the iconic Macy's department store in Manhattan. Most construction in Europe at the time was done with more old-fashioned Victorian methods. Having gained expertise in America, he decided to return to his home country of Sweden in 1907. Upon his return, he co-founded a construction company called Kreuger & Toll, which built large buildings based on the modern construction methods he learned in New York. Kreuger & Toll was a huge success. They won high-profile contracts, including constructing the Olympic Arena for the 1912 Olympic Games in Stockholm. In or around 1913, Kreuger started raising capital by selling shares of Kreuger & Toll to the public. Back then, the stock market was not nearly as formalized as it is today. There was no formal IPO process. He just started selling shares to wealthy investors, at first mostly in Stockholm. A few years later, Kreuger decided that he wanted to expand into the match business. Remember that his father used to own a small match factory, so he knew the business quite well. This was before lighters were invented, so people who smoked tobacco needed to constantly buy new matches. This was big business at the time. While Kreuger & Toll started off as a construction company, it soon morphed into a holding company for Ivar Kreuger's diverse range of business interests. With the success of Kreuger & Toll, Ivar had gained credibility with many wealthy investors in Stockholm. In 1917, he raised about 45 million kroner by selling shares in a new subsidiary he created called the Swedish Match Company. Adjusting for the exchange rate and inflation, 45 million kroner back then was worth the equivalent of about $200 million in 2024. The Swedish Match Company was a fully controlled subsidiary of Kreuger & Toll, but was independently listed on the stock market. Kreuger retained the majority of super voting shares, which gave him complete control over Kreuger & Toll and the Swedish Match Company, even as his economic ownership was diluted from the issuance of new common shares. Kreuger used the money raised from the equity issuance to buy up dozens of small match factories in Sweden, and started exporting matches around the world. One of the reasons Kreuger became so popular with investors is that his companies would always pay generous dividends. In 1918, the first full year after Swedish Match was incorporated, he paid a dividend worth 22% of the company's share capital. This 22% dividend cost Swedish Match about 10 million kroner. That year, they only reported a profit of 4.3 million kroner. The core business of selling matches only generated a profit of 1.6 million kroner. The remaining 2.7 million was attributed to earnings from various transactions. The earnings from various transactions line item would become a common feature in the financial statements of Kreuger's companies. Kreuger claimed that these profits came from successful currency speculations and real estate transactions, but he typically refused to give many details. Given the high dividend yield, shares in the Swedish Match Company became popular investments around the world. Kreuger started selling new shares at the New York Stock Exchange as well as various exchanges across Europe. Investors were eager to get their hands on these high-yielding shares, and they would often sell for a significant premium to their book value. Kreuger used the capital they raised from the new share issuances to expand the match business, as well as to acquire unrelated businesses. By the mid-1920s, Kreuger and Toll had become a massive industrial conglomerate, owning dozens of subsidiaries across many different industries, including real estate, banking, mining, and many others. Most notably, he acquired a Swedish telephone manufacturer called the Ericsson Telephone Company. To this day, Ericsson is still one of the largest telecommunications companies in the world. Despite diversifying into many different industries, the core of Kreuger's conglomerate remained the Swedish Match Company, which generated the majority of the profits. This was a bit surprising, as matches are a commoditized product with little differentiation between brands. There were dozens of large matchmaking companies around the world, leading to fierce competition and razor-thin profit margins. Despite this, Kreuger was able to make far higher profit margins than any of his competitors. In the beginning, he had legitimate explanations for his high profit margins. Firstly, he was a big believer in vertical integration. He acquired logging operations and chemical factories that supplied the raw materials for match production. Bringing more of the value chain in-house supposedly allowed for greater profits. More importantly, Kreuger was able to strike deals with various governments. Following the end of World War I, many European governments found themselves in precarious financial positions due to the high costs and decreases in tax revenue during the war. With most of these countries already carrying excessive debt burdens, few investors were willing to lend them more money. One of the few investors willing to open his purse strings was Ivar Kreuger. Between 1925 and 1930, his companies lent $400 million to various European governments, which was worth about $7 billion in today's dollars adjusted for inflation. This included $30 million of loans to Romania, $36 million to Hungary, $38 million to Poland, and $125 million to Germany. All of these countries had poor public finances at the time, and were thus desperate for whatever money they could get their hands on. As a condition for giving these loans, Kreuger demanded that his company be given exclusive rights to sell matches in these countries. These monopolies were highly lucrative, as they allowed Kreuger to set high prices and earn excessive profits. Kreuger needed to raise hundreds of millions of dollars to make these government loans, and set up factories and distributions in new countries. This was no problem for Kreuger. He was able to easily raise this money by selling new shares on stock exchanges from New York to Berlin. Investors were more than happy to invest in his companies thanks to the high dividend yields. In every single year since the Swedish Match Company was incorporated, it paid a dividend of at least 12% of its share capital, and usually much greater than that. It's important to remember that this was happening in the roaring 20s, behind a backdrop of surging stock market and general investor optimism, especially in the United States. Kreuger was the largest beneficiary of the market rally. By the late 1920s, shares in Kreuger-owned companies were the most widely held securities in the United States. Operationally, the company seemed to be doing very well. By 1930, the Swedish Match Company had become the largest match producer in the world by far. It had 250 match factories in 43 different countries. 75% of all matches sold in the world were made by the Swedish Match Company and its subsidiaries. Kreuger was universally viewed as a genius businessman. Due to the skyrocketing value of his company's share prices, Kreuger's net worth peaked at $200 million, or roughly $3.6 billion today adjusted for inflation. This made him one of the richest people in the world. While Kreuger's scheme of loaning money to governments in exchange for monopoly rights sounded good on paper, it wasn't quite as lucrative as it initially sounds. In the vast majority of cases, they were required to pay a royalty to the government for each match it sold. These royalties ate up most of the monopoly profits. The Swedish Match Company wasn't actually much more profitable than any other match company. Kreuger personally created the company's financial statements without any reference to accounts or bookkeeping. He just made up the financial statements in a way that would look good to investors. He then told his accounting team to work backwards, fabricating journal entries and records that would add up to the numbers of the pre-prepared financial statements. Since going public, both Kreuger and Toll and the Swedish Match Company consistently paid large dividends. Their dividends always equaled at least 12% of share capital, and were usually in excess of 20%. As it turned out, the company's legitimate profits were not nearly enough to fund these dividends. At the same time as he was returning capital to shareholders in the form of dividends, he was simultaneously raising capital from investors by issuing new shares. For the first decade or so, the amount of money raised from the issuance of new shares was greater than the amount paid back to investors as dividends. Schemes like this are never sustainable, as the cost of dividends increases exponentially as the share count rises. It was basically a Ponzi scheme. Kreuger's business empire needed to continuously expand. Every time he issued a new tranche of shares, he needed an excuse as to why this money was necessary. By constantly expanding the core match business as well as acquiring unrelated businesses like Ericsson, Kreuger was able to justify his never-ending hunger for new capital. Many of these business expansions were unprofitable, but were necessary to continue the charade. Kreuger's conglomerate was like an octopus, operating hundreds of subsidiaries across dozens of countries. Kreuger played highly complex accounting games, where profits and losses would be arbitrarily allocated across various subsidiaries. Ostensibly, he did this for tax reasons. He set up shell companies in tax havens, including Liechtenstein and Holland, to minimize the company's tax burden. In reality, this had nothing to do with tax avoidance. They were instead meant to conceal the fact that most of the profits never existed. Remember that much of the Swedish Match Company's purported profits came not just from its core business of selling matches, but also from nebulous line items earnings from various transactions. Kreuger would speculate in the foreign exchange and stock markets, as well as buy and sell real estate. These activities created profits to supplement the company's reported earnings. In most years, earnings from various transactions made up the majority of the Swedish Match Company's reported profits, and this line item was always positive. Kreuger's trading activities never resulted in any losses. As it turns out, the earnings from various transactions were almost entirely fictitious, existing only on paper. Kreuger had hundreds of shell companies borrowing and lending money to each other, and supposedly holding various assets on their balance sheets. He even created a fake bank called the Netherlandish Bank for Scandinavian Trade, and recorded on his balance sheets millions of dollars he supposedly had deposited at the bank. Kreuger went so far as to create fake certificates of deposit from these fake banks to show his auditors. While the idea of tricking an auditor with a certificate of deposit from a fake bank might sound absurd by today's standards, keep in mind that this was long before the days of the internet. If the auditor is based in Stockholm, and Kreuger shows him a certificate of deposit from a small bank in Liechtenstein, short of taking a multi-week journey to Central Europe, it would be very difficult for the auditor to confirm or refute the existence of this bank. Kreuger's web of shell companies was so complex that it was almost impossible for anybody to understand. Only consolidated balance sheets were published, so investors had no way of disentangling the vast web of subsidiaries and shell companies. When Kreuger was issuing new shares, investment bankers would often question him about seemingly suspicious transactions between his various subsidiaries. Kreuger would always give complex explanations about tax avoidance or complying with local regulations. In most cases, the investment bankers didn't understand Kreuger's explanations, but given Kreuger's reputation as a financial genius, they assumed that his tax strategies were just too brilliant and complicated for them to understand. They avoided challenging him in fear of exposing their own ignorance. In October of 1929, the American stock markets crashed, ushering in the beginning of the Great Depression. Investors' appetite for new stock issues dried up, and Kreuger was no longer able to raise hundreds of millions of dollars from the equity markets as he used to. If he was to keep his house of cards standing, he needed other sources of cash. In 1930, he started selling off some of the companies his conglomerate had previously acquired. One of these companies was a telephone maker, Ericsson. In 1931, he agreed to sell it to an American telephone company called ITT. As part of their due diligence process, ITT sent auditors to visit Ericsson's headquarters in Stockholm. When reviewing the books, they found that 27 million kroner of cash recognized on Ericsson's balance sheet wasn't actually cash. It was instead a credit against another one of Kreuger's companies. When confronted about these discrepancies, Kreuger couldn't come up with satisfactory answers. ITT terminated the merger agreement. Word of the failed merger quickly spread around Wall Street. Bankers started to grow suspicious of Kreuger. His previous reputation as a legendary businessman showed cracks for the first time. March 11, 1932 was the last day of Ivar Kreuger's life. He was visited at his corporate headquarters in Stockholm by a banker to whom one of his companies owed money. Kreuger was trying to negotiate an extension to the loan. While he didn't have the cash on hand, Kreuger instead had Italian government bonds worth £29 million that he could offer as collateral. He produced a bond certificate signed by the Italian finance minister as proof. Having grown suspicious of Kreuger following the Ericsson debacle, the banker wasn't interested in extending the loan, even with the supposed collateral. The banker made a seemingly innocuous suggestion. If he's short on cash, why not just sell the Italian bonds? The Italian government would have been more than happy to buy back the bonds for a small discount. The problem is, these bonds were fake. None of Kreuger's companies had ever lent money to the Italian government. Kreuger personally forged the Italian finance minister's signature. At this point, Kreuger had run out of excuses. If the bonds were real, there was no logical reason preventing him from selling them. Shortly after this meeting with the banker, Kreuger went to a local gun store to purchase a revolver. His maid found his lifeless body in the office the next morning, the revolver still in his hand. Following his death, the Swedish government set up a special commission to investigate his companies. While Kreuger and Toll had consistently reported net profits in excess of 20% of their share capital, the special committee found that in most years, the company's operating profits did not even cover their interest expense. The company had been losing money for years. Within 2 weeks, Kreuger and Toll was officially declared bankrupt. By this time, Kreuger's companies had raised over $300 million from investors, mostly on the New York Stock Exchange. This is equal to about $5 billion 2024 dollars adjusting for inflation. In the bankruptcy process, common shareholders were wiped out. While the financial statements Kreuger presented to the public were near total fabrications, his conglomerate nevertheless contained many legitimate businesses. They just weren't nearly as profitable as he had led the public to believe. The businesses were auctioned off, with the proceeds used to pay Kreuger's creditors, although most of them only got pennies on the dollar. A number of Kreuger's companies are still operating today. Today, Ericsson is still one of the largest telecommunications equipment makers in the world, with annual revenues of more than $25 billion. The Swedish Match Company eventually expanded beyond just making matches. Today they make smokeless tobacco products, including artificial nicotine pouches sold under their Zyn brand. The reason Kreuger's fraud was able to last as long as it did was because of his reputation. Kreuger was universally viewed as a financial genius. Investors were willing to suspend their disbelief and buy his shares for the 20% dividend yield. Nobody really understood how Kreuger's companies were so profitable. But instead of making people suspicious, this only served to bolster Kreuger's reputation as a genius businessman and financier. Ivar Kreuger's fraud was one of the biggest motivating factors behind the Securities and Exchange Act of 1934. This created the SEC, as well as a standardized set of disclosures that all publicly traded companies are required to publish. These regulations were meant to prevent fraudulent enterprises from selling shares to the American public. Yet 100 years later, fraudsters are still using a lot of the same tactics employed by Kreuger. Take the example of Bernie Madoff. Nobody knew how Madoff was able to generate such great returns. They just assumed he was a financial wizard who refused to disclose his secrets for competitive reasons. Similarly, most people assumed Sam Bankman-Fried was a crypto genius who could consistently make billions of dollars of profits with his hedge fund Alameda Research. Nobody knew how he was making so much profit, but nonetheless believed it to be true. Alright guys, that wraps it up for this video. What do you think about Ivar Kreuger? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.